gentlemen, as we've had apologies from the Chair, may I ask for nominations for appointment of Chair for this meeting? Councillor Fielding.
And I nominate Councillor Fedora.
Can I second?
Thank you. Any other nominations? Okay. Over to you, Chair.
Morning, everyone. Thank you for nominating me as your chair for today's meeting. So, can we crack on with starting with apologies for absent?
It's Councillor Clark. Councillor Clark on other council business.
And declaration of interest. Anyone? And then can we confirm the minutes of the last meeting held on the 31st March 2023 as a true record? Agreed. Then we'll move to item 5. Becky, over to you.
Thank you, Chair. So this is the Revenue and Capital Outturn Report relating to last financial year 22-23. So I think before I start, I'll give a bit of a history on where we are when we were doing the monitoring last year. So at the time, during the last financial year, we were anticipating a significant deficit for 23-24 up towards the region of £3 million. So in anticipation that we might have to make significant cuts, we delayed the recruitment for whole-time pay throughout last financial year. So as you're probably aware, we were awarded permission to increase council tax by £5, which Fire Authority approved in February, and that's largely taken the threat of those cuts away. So we're now paying a bit of catch up on recruitment. So it's a bit of backdrop towards the report, because those because with the vacancies that we had, we were looking at significant underspends early part of the year in excess of £1 million. But the firefighter pay award of 7% was quite significantly above the 3% that we put in the budget. So that's taken up most of those, but it has managed to be contained within the budget for the year due to those vacant posts. So I thought with new members it would be worth giving a little bit of history to the year's reports. So the budget for the year was 46.006 million, and we spent just over 45 million. And you'll see in the tables on page 12 that represents a £236,000 underspend. So largely right on budget, but obviously with quite a lot of variance during the year, as I've just discussed. So we also received some additional funding, additional grant that we weren't expecting, which you'll see in table 12, additional business rate grant. We were expecting some, but it came in a bit higher than we expected. So if I just talk through the main variances, the main changes, we've got whole-time pay that's still underspending by 438,000, which sounds quite a lot, but it is just 1.8% of the budget for whole-time pay. So because it's obviously our largest area of expense. So we've got a transport cost, you'll see on point 2.12, paragraph 2.12, overspent by quite a significant amount, 433,000. That's largely down to increased maintenance costs of the fleet. We're in the process of replacing a large proportion of our fleet due to delays. We've delayed the programme through COVID, and we had a vehicle review as well, so it was delayed anyway. And then the problems we'd had, like you'll be aware, in most of the motor industry, the delivery times for these vehicles has just been going on and on and on, and they haven't been delivered. So that's caused the fleet that we've got has been aging quite a lot, and has had to have increased maintenance cost as an unplanned expenditure. And also fuel has overspent by 209,000, largely due to the increase in the fuel prices that weren't built into the budget. We had thought it was going to be higher than that at one point, but the prices have come down towards the end of the year, so that's £200,000 overspend. Obviously our fuel costs are quite significant, with the appliances not being very economical to run given their weight. So on the other side of that, we've had an increase in income, nearly £600,000, which set out in 2.16. Estimate we've had an increase in the interest that we've received on our cash balances. That's partly due to the increase in interest rates. That's a small benefit for us there. But also due to the delayed expenditure, mostly on those fire appliances that I was talking about, we have borrowed some money towards the capital programme, but it hasn't actually been spent. I'll come on to that in a little while. So our cash balances have been a bit higher than we anticipated, which is why we've got that additional income there. But that's clearly offset by the cost of the borrowing of those loans. There's also 170,000 additional grant that I was just mentioned that the billing authorities calculate on our behalf due to COVID reliefs that they get. And when we set the budget, we didn't have all the information we needed, so I was tended to be quite prudent on that. So we've got a little bit extra than I anticipated at the time. So moving over the page to table 2 on page 16 shows that we would like to use that £236,000 underspend towards creating 2 new earmark reserves. The first one is well, they're both existing reserves. The mobilising replacement mobilising system is a large project that's underway, and the project team that we've put together we did anticipate some resources were required, but now that Leicestershire have dropped out of the project, those costs are now split between the 2 authorities instead of the 3, and we're also trying to pick up some extra IT work within that team, a joint team, so that we're not both services picking up those costs from each authority. So I'm planning to use that 213,000 towards that additional expenditure by putting it in an additional reserve that will fund the expenditure during this financial year, because it's not included in this year's budget. The iTrent reserve is we're doing quite a significant amount of work on iTrent, which is our system for payroll and HR system, and we're trying to automate a lot of our working practices and make it more efficient so that we can free the resources of both teams up to do other work, largely around the pension work that we've got coming on at the moment. So we're proposing to move 23,000 into that reserve to pay for some additional consultancy time, which should pay for itself in the long run in the time saved in both teams there. Table 3 in section 2.19 shows your reserve position. So it shows that the net change in reserves for the year is an additional 331,000 moving into those reserves, taking the balance at the end of the year, end of March, to 10 million, just short of £10.3 million. So you'll see those figures coming through in the statement of accounts a bit later, so I'll draw your attention to them now. So that's revenue side. Has anybody got any questions on that before I move on to capital?
Yeah, so in terms of the, I think the main one actually is the apprenticeship levy.
Oh yes, yeah.
So I'm just putting on my council power now. When I was on personnel, there was a big thing that actually you can't use the apprenticeship levy essentially as profit. No. It's got to be spent on training essentially.
Yes.
In education. I know I think it may just be a bit of the wording. Because when it says essentially this income net sort of represents a budgetary surplus, why do we get to keep that money?
The costs are already built into the budget, so obviously we do that apprenticeship levy relates to some of the firefighter training and also Green Book. It's usually a year behind, so we would have had some training of the firefighters back in 21-22 and also on-call firefighters. So that relates to that, but the costs costs that in delivering that training far outweigh the apprenticeship levy that we've received. So we're not making a surplus out of it, but those costs
So it
are
just goes
already
in- it just goes
included
into
in the
training.
budget. Yeah.
Which is, no
Yeah.
worries. I thought it might just be a little bit of the wording.
Yeah,
of it.
sorry. Yes,
No worries.
not clear.
Could I ask on the surplus, the grant we got, the business rate COVID grant,
Yeah.
which was in effect a bonus, for want of a better word. Is there any danger or possibility that that might have to be clawed back at some point, or do we not know yet?
So it's calculated on the reliefs that the government gave to businesses during COVID.
Yeah.
If you remember, they got, I can't remember the exact percentages, up to 50%-ish, I think, from memory,
Yeah.
something like that rate. But, so businesses received business rate relief, and then the billing authorities received compensation, and we feed into business rate billing authorities.
Right.
So that's our 1% of the COVID relief that the billing authorities would have received.
Okay.
Okay,
Yeah.
so we estimated it at the beginning of the year, and those figures are based on the actuals. So we've got a bit more in once the actual figures came in. So no, it's not likely that we would have to repay it.
Right. Well, it is what it is. Then. That's okay.
Yes, thanks.
Right, thank you.
Just a completely different one now. So in terms of the fleet maintenance budget, I think that's one we almost got to probably keep an eye on now.
Yeah.
I suppose my question is, obviously it's delivery delays, is one of the causes. Do we know what these delivery delays are?
I think perhaps Terry might be the best person to answer you on those.
Yeah, the largest delay is the actual supply of the chassis from the manufacturer. So the tender went in, and the chosen builder are supplying Scanias, which is good for us because the rest of the fleet are Scanias. And the lead time at the time of the tender was estimated at 9 months. Once they placed the order, the actual lead time was 18 months. So there's a huge delay in the supply of the chassis before it gets the builder. That's the main reason for the delay.
Not ideal then.
We've now got some confirmed delivery times, and our first 4 are arriving shortly, within the next month, to the builders. So the programme is been reset, and we should have 4 new pumps rolling off the production line. The last one being in April next year, but we should have 3 before that.
Follow-on question: do we know where the production line is and where the chassis are made?
Yeah, it's Scania, so they're coming from Sweden, Scandinavia.
So I understand the logic. You want to keep the same brand, so you've got the same equipment across your fleet.
We couldn't do that because of procurement rules. We couldn't say go and buy a Scania. Based on the specification that we wrote, the builder decided that the best chassis to fit that specification was a Scania.
I just echo your comments. I mean, I've been banging on about this for about a year or so, haven't I, about when are these going to arrive, and I was picking up expected. I didn't know how certain you was, but expected is not a certainty, but you're now saying you've every faith you've got actual dates. Because it does impact, as you say, on the maintenance costs, doesn't it? I can absolutely get it. The older the aging fleet, the more costs on your maintenance, the more strain on your budget.
Yeah.
We had 3 catastrophic engine failures this year. Some of the appliances are coming up to the 15-year-old point now. They've got 100,000 road miles on them, but that doesn't equate to the amount of time the engine's been running, because majority of the time they're static. The engine's running while they're pumping. There is a formula we can come up with. So you're probably close to 200,000-300,000 miles these engines have done over the time.
I just feel the frustration of the front line if that happens. It breaks down.
We've got 7 reserve appliances,
Okay.
and at no point did we ever lose operational readiness because of maintenance. So we've managed to keep the fleet on the road, so to speak.
Well done.
And that leads nicely into the fleet maintenance part of the capital budget, which we did in January. We did slip the fleet, the vehicle budget for those pumps. So we slipped £2 million in January into this financial year relating to those. So so the budget was reduced at that point. So now we're looking at a capital spend of £2.26 million against a budget of £4 million. So the difference, some of it is underspend. We've managed to procure and get prices. Obviously, we put the budget together based on what we think the prices might be, and some of them have come under. So we've got some savings there, and some equipment we may have changed the spec that we need as well. That's delivered some savings. So, but we're still looking at about £980,000 of slippage, which you can see in table 5 on page 20. So most of those, a significant element of those relate to the emergency services, the ESM project, which is a national project. We're looking at a couple of these projects relate to ESM, and it's a national project that's been delayed and it's just been put on hold. So the capital expenditure has been halted on those. We've got some IT equipment as well. We're struggling with resources in the IT department at the moment, and it has delayed some of the projects and the equipment being delivered. And the other one is the Tri-Service Control project, which is ongoing. It's part of a multi-year project that we're building up. So some of that has just slipped into next year's funding. So has anybody got any questions on those capital things? So the recommendations of the report are to note the contents of the report, to approve those 2 transfers into earmarked reserves that we talked about, and also to approve the slippage of that 980,000 into 2023-24.
So members, so do we know the contents of this report? Agreed at the content?
Yeah.
Agreed.
Yes.
Yeah. So, and the second one, to approve the transfer of 236, as Becky said, of underspent earmark reserve to support ongoing projects according to section 2.2. Agreed?
Yeah.
So Becky, move on to item 6.
Yeah, 10 point views.
Oh, yeah, the last one. Okay, 10.3. Approve this slippage of 980 on the capital program as detailed on section 2.43, and that is table 5. Agreed.
Agreed. Yeah.
So move on to
Yeah, thank you very much. So next report, agenda item 6, relates to the revenues, capital and the prudential code monitoring April 23. So this is a similar report but relating to this financial year rather than last financial report. So the budget was set back in February. So there have been a few updates since then. So the report will reflect some of those changes. And also the expenditure to the end of April. So the reports for this need to go out early in June, so we haven't managed to take it up to the end of May. So although we are quite limited in the amount of expenditure that has gone through in 1 month, it's still worth bringing, just really to update on changes that we do know about in the financial year. So you'll see from table 28, page 28, table 1, that there is an underspend, we're projecting underspend of 1.3 million. So that's quite significant that we're projecting that at this stage of the year. There's 4 main areas that are underspending. First one's whole time pay, which is in section 2.3, and that relates to the ongoing vacancies that we've got in whole-time recruitment. I did build some vacancies in, but we're still looking at between 16 and 28 posts down, which is more than I put in the budget. I allowed for about 12. So we are running a recruitment programme now. We've got one running in April, but a number of the trainees have pulled out for one reason or another. So we're reduced slightly on those, and then we've got another course running later on September, isn't it? So we will pick some up towards the end of the year, but with it being such it's we can only put 12 through in one particular limit. So the training school mean we can only put 12 through at once. So it does take a little while to get. We're expecting it to take a little while to get recruitment back up to where we need it. So 2.8, we've got additional income of 416,000. So we've got an additional protection uplift grant. So this relates to, it's a Home Office grant to enable the inspection of buildings. It's linked to the outcome of Grenfell. So that's an ongoing project, but that's additional grant that we've received. It may be that we've still got funding that we received last financial year that we haven't spent yet. So it may be that we need to put some of that in earmark reserves towards the end of the year if it's not all spent. The project is ongoing and work is being undertaken. There's also a surplus similar to the report previously of 217,000 that we're expecting on interest on our cash surpluses for the same reasons that I mentioned earlier, because our cash balances are higher than expected and interest rates have gone higher than we anticipated in the budget. The other area that underspend is the capital financing costs, because the minimum revenue provision is the cost of capital, and because some of the again because of the underspend on vehicles and other areas of the capital expenditure, we're not required to put those costs through until the projects have been completed. So because they've not been completed, we're not required to pay the debt costs in this financial year. So moving on to reserves on page 30, you'll see that shows that we're anticipating an increase in reserves at the end of the year. So higher than we were anticipating, but when we set the budget, it was on the basis that we would be requiring 404,000 out of general fund reserves. So the amount that's going into reserves will be a bit less than the £4 million. So capital programme, details on page 31. So there's not very much happened yet on the capital programme. So we've got a couple of recommendations. We've got a small additional. We had some grants previously for MTA work, which is marauding terrorist attack work for equipment that we need, and we spent most of it at the time, but there was some left that was put in earmark reserve, and we need some more equipment. So 2.30 is just adding that to the capital programme. Normally a £12,000 project we'd fund out of revenue, but it's capital equipment, and it's a capital grant, so it's required to be spent on capital equipment, which is why it's flowing through the capital programme. And then in 2.33, we just to reflect the discussions that we've had earlier about the appliances. We've got 3 appliances that we're expecting in this year, but as Terry alluded to earlier, the 4th one that's in this year's budget, we're not expecting to land until April 24, so that will come out of next year's budget. So we're trying to move some of the equipment budgets around to utilise this year's appliance budget for ladders and some fans and some portable pumps that are required. We've been advised that we can now get some of this equipment quicker than originally anticipated, and also that the costs for the pumps the light pumps are due to increase in July, so it makes sense us to swap that budget around a little bit to make use of the underspend and also to take advantage of those circumstances. So although it's still within budget, there may be a small adjustment we need to make towards the end of the year, but these things tend to change a little bit during the year, so we'll hang on and see where we are later on, and you'll see further reports on that if necessary. Has anybody got any questions on the
Any questions?
Just a couple on the recruitment. I know we're very early in the year, but you referred to there's recruitment still going on for the whole time pay, but we're also a little bit down on the non-uniformed aspect. Are we actively sort of doing recruitment to try and make those?
all of the time?
Yeah.
Yeah, all of the time. We did lose in excess of 20% a couple of years ago, and last year we had a big turnover. Well, when people come back from COVID, I think people reevaluated their lives a little bit.
Yeah.
So we had quite a big turnover, and then moving up here as well, some people, the travel distance, although it's not particularly great, may have affected people. So we're not quite sure of the split, but we did lose quite a significant number of people. But we are recruiting, and they've been managing. That level of people leaving has dropped back to normal levels now. So and some areas are particularly difficult to recruit to. We've had difficulty in IT, for example, and also in my finance team as well, and pension skills. The firefighters' pension scheme is very complex, and
They all are.
with the legal challenges that we've got with McLeod and Matthews and O'Brien, we're trying to recruit extra staff, and some of those I've had vacant for a year now. So it's not that we're not being proactive. It's just that nationally the skills aren't there, and you're fishing in a very small pool.
And could I just ask as well, just a query really on 2.26, the electric charging points.
Yeah.
Who uses it? Are they for people who are at work during the day and charging up? And is there a sort of a revenue possibility or implications as well?
Yeah, there is. I've got the resident expert here, so
Okay.
I'll hand it over to
Sorry if
Sarah
you've covered all
yourself.
these before, but I've
No, we haven't. No, it's a good question.
So the objective is to get the whole of our light fleet in 5 years to be fully electric, and we're approximately 50% away along the way in doing that. So a lot of the light vehicles that are not blue light vehicles, but they're used by Green Book staff predominantly, are electric. So we have electric charging points at the moment in 12 of our stations. The aim is to get every single station, including all the on-call ones in the north of the county, with electric vehicle charging points. With regards to revenue, it's a small amount, but anybody that's got a electric vehicle, we allow them to charge it at work, but we do recharge at cost.
Okay.
So we recharge it at cost of the electricity to any of our staff who choose to take on that option.
Okay, that's good. That's just curious. Thank you. That's very helpful.
Yeah. You've asked the question I was asked. Oh, sorry, you go first.
I was going to go back to the IT stuff actually.
Okay.
So I know in 2.15 it's mentioned that spending on the IT projects is a lot slower than anticipated, and it's expected to pick up as the year progresses.
Yeah.
I think we can almost allude to why it slowed down. I'm just wondering why you expect it to pick up later in the year. Is there a particular reason for that, or is that just a assumption based on previous years where it seems to pick up?
Yeah, and I think also some of the equipment will relate to projects that are coming along as well, and we've got specific IT resources allocated to some of those projects. So we're it is quite difficult to recruit to that area. So there is a risk that we may not achieve that, to be fair, but we're certainly working towards getting that project.
I suppose the follow-up question as well is there's quite a lot actually in this IT section, including Wi-Fi access points, etc. I'm just wondering who leads on those projects. Is it the IT team, or is it a separate team that says this is what we're doing, and the IT team has to almost follow them up.
It's a bit of both,
Implement it.
really. It's a bit of both. So if we've got specific projects, and the traffic control system obviously is a really big project and is very technical in nature. So we do have staff involved with that. So if it's a specific project, they sit on the project team and work on those projects, but then also just the general equipment around the building and access and for staff and other equipment is just a rolling programme of replacement and renewal and improvement as technology improves. So it's a bit of both.
Yeah, I'm almost conscious that the IT team has quite a lot to do, including the cloud stuff as well. So they also want to be, have people running ahead of them and they're trying to play catch up, but they can't actually focus on being proactive.
Yeah, so it's a challenge, it certainly is, yeah.
Thank you. My question on 226, electric charging points, has been answered, and I'm very pleased with the response. I also support 227, the energy reduction and decarbonisation, the consultant's appointment there. So my only question left is 231 on transport. Those light vehicle replacements doesn't say whether they're electric vehicles or not. Any thoughts on that?
It is, yeah. So we've got to maintain part of our fleet for response vehicles. So the light vehicle replacement this year is actually 5 new response vehicles, which are blue light. Now, whilst we'd love it to be 100% electric, we just couldn't convince our response management and team that we can go fully electric on response yet, although the technology is almost there. So we've got hybrid vehicles. So we've gone halfway.
That's good. Thank you.
Okay, if I can just move on to just quickly, the last part of this report relates to the prudential code monitoring on page 34. So this is for those of you that came to the training, the member training at the beginning of the month, these are the indicators that are agreed by Fire Authority in February that we report on at each of these committees. So the table table 4 shows that we're in line with all of the indicators that were set, but the bit that I would like to draw to your attention is the borrowing cost is exceeding the capital finance requirement, and that's fine. That's not particularly an issue, but normally the capital financing requirement, it does say how much we think we need to borrow to fund the capital borrowing, so it's just a little bit odd that it is over that. And I just wanted to bring that to members' attention, and the reason for it is that we've been borrowing in anticipation of interest rates increasing. So we borrowed a lower rate quite early on, but we are repaying a £3 million loan in March of this year. So that will come back down to in line with that capital financing requirement by the end of the year. But just for clarity, I wanted to bring that to your attention. But other than that, I don't have any more comments unless anyone has any questions. And then, so recommendations of the report are to note the report, including the changes to the fire appliance capital budget, when we moved the equipment around that we talked about in section 2.32 to 2.34, and also the addition of that small terrorism equipment to be funded from the capital grant in section 2.30.
Councillor Ben.
I was just going to say approval.
Approval. Oh, okay. So members, page 36 here. To know the recommendations on 10.1 and 10.2. Agreed. Belly has agreed.
Yeah, agreed.
We'll move on to item 7.
Right. This is the thick agenda item, and I deliberated for quite a while yesterday on how much detail to go in. I think you might like to read it page by page. No? All right then. I'll let you off this time. So this report comes here because this undertakes the role of the audit committee for the authority. These are the unaudited final accounts, and legislatively we have to publish these by the end of May. So these went on the website by the end of May and were made available to the auditors in line with the statutory deadline. It's going to take some while to get them audited because of the current issues in the external audit, not to be confused with internal audit here that we've got later on on the agenda. But external audit our statement of accounts, and with some of the issues in local government there have been significant delays, and in fact I had a pre-meeting with the auditors yesterday about auditing 21-22's account, and they're coming in July, so we're a whole year behind on the audit, so it's going to be some time for these to come through as audited accounts, which will then be approved by Fire Authority. But they come here initially for scrutiny, so we're not expecting them to change at the moment unless there's any changes in the pension legislation coming forward in October, which may mean that we have to revalue the pension accounts because of the delays in the audit. But that's all I can foresee at the moment.
Yeah, Becky, can we know why the delay?
The delay is
2001,
yeah.
2015.
Right,
Why
so-
the delay? Yeah.
So audit firms there's a public sector audit appointments organisation that appoint all auditors on behalf of the public sector. So we asked them to appoint auditors for us. So they did that process back in, I think it was 2016, and we have Ernst Young, but that doesn't really, all the audit firms are really struggling because just after they were appointed, they had some revised code of audit practice came out and substantially increased the amount of work that they had to undertake as part of the audit. And the prices that they won the contracts on didn't account for the level of work undertaken. So they have tried to recruit additional resources, and they are trying to charge us additional costs for doing that work. But it takes at least 3 years to train an auditor, so it's very difficult for them just to, and public sector audit is quite specialised. As you'll see when I come to some of the accounts, our accounts are different in quite a lot of ways to private sector accounts. So you do need some expertise in that public sector area, and they're just struggling to get enough people with the training and expertise to undertake the audits. So it's slowly, as each year, we've got sort of 3 or 4 months further behind each year. We struggle also because the whole of government accounts are pulled together. They pull out all public sector accounts, and large authorities that feed into that get audited on the whole of government accounts. But we're quite small. You know, you may think that £50 million is quite a significant sum, but in terms of the whole of the country's public services, we're just a small drop in the ocean. So, and then that we fall below the threshold for our whole of government accounts to be audited. So our return doesn't need auditing. That is not the accounts; these need auditing, but the return for the whole of government accounts doesn't. So they've been prioritising those firms because if the whole of government accounts audit isn't undertaken, then it would put into scrutiny the whole country's accounts. So they take priority, which means that the county council and most of the authorities have managed to get their accounts audited just about on time this year. But fire and other smaller authorities haven't, and that's the reason why. And I expect it will go on for another couple of years yet. So those are the reasons. Disappointing. It makes it very difficult, having just done these accounts, to get the auditors in to do last year's, to get my staff are confused in dealing with queries, which year relates to which year. So, okay. So you've already had the outturn report. Previous item for this year, and you'll see some of those figures flow through into the accounts, but they are serving a different purpose. So the outturn report is your like management accounts. They relate to what get charged to taxpayers, whereas the audited accounts, the statement of accounts looks at something slightly different. It looks at the full cost of providing the service, not what we charge the council taxpayers. So where you've heard me talk about the debt costs and the minimum revenue provision, which is like your mortgage payment, but the accounts will have the cost of the assets depreciation. They'll have depreciation costs, which, you know, if you have a car over the life of 5 years, it'll have a fifth of those costs in, where it doesn't matter how it's funded, whereas the minimum revenue provision only hits in if you've borrowed money. So I suppose it's like the cost of your house at home might be significantly more than your mortgage. So that's a way of thinking about it. And so this is what the cost of providing the services versus what we charge the taxpayers. So we have adjustments for capital costs. And the other really large one is the fire pension scheme. So this is an additional, this year it's additional £13 million, but this authority isn't responsible for those costs because they're met through legislation by central government. So the firefighter scheme is unfunded, so by about £10 million each year. So the amount that we draw in from contributions from our staff is £10 million less than the amount we actually pay out to our retired members, the pension scheme. So, but the statement of accounts reflect the full cost of providing those pensions, whereas they don't fall to our local council taxpayers, which is why you don't see those in the report that you saw earlier on. So the figures in here are quite different, but you will see some of the familiar figures running through. And I would say it's obviously we're not bringing these to you as accountants for scrutiny, and you will get an audit on them regarding the accuracy of the figures. But your role for scrutiny is to check that there's nothing in here that looks really odd. I haven't put something through for a major, like 6 new fire stations that you know we haven't got and things like that. So it's just making that they make sense to you, that they reflect what you know about the organisation. So I've picked up some of the key figures in the report, and I suppose if we look at the income and expenditure account. So if you go to page 68 and 69 is your reserve statement. So you'll see there the reserve figures that we saw in the earlier report. So you've got 2 years worth here. So 22-23 is on page 69. So those figures at the bottom, the 4959 and the 5.4 million are the figures that we saw in the report earlier on. And so that shows the changes in the movement of reserves, which is the closest thing that you'll find to your report that you had earlier on. And then on page 70, you'll see that this table tries to convert what you've had in your report, the amount chargeable to the general fund, the amount chargeable to the taxpayer, and move that into the income and expenditure for the account. So those adjustments between funding and accounting basis is what I was talking about earlier on. It's the cost of the pension and the cost of your debt costs for the capital programme. So you'll see there the 331, the surplus on the general fund balance, is the figure that we saw earlier in the report, and that 484 in the earlier report that we had. So those are your transfers to reserves for the year. Okay, so you'll find lots of other information in the notes about where we've got things invested, how our assets have been revalued and their value, the current values, and lots on got officers' remuneration, and also quite a lot of information on the pension fund. So, but I wasn't going to go through that in any detail. I can pick it up if people would like a future member training. I can pick up a bit more information on. But if I start, you could be here till Christmas if I start going doing that. So but obviously, I'm willing to answer any questions that you have. So, so if I just the narrative statement at the beginning is a bit of an introduction to where we are and how they relate to that activity during the year. And there is a governance statement in here as well that covers the corporate governance, and that will come through to Fire Authority for proper approval at the same time when the accounts are requested to be approved later in the year. So you'll see that coming through Fire Authority at the moment. That's a draft statement. Okay. Has anybody got any questions, or is there anything that you'd like to talk through in more detail?
No, I just want to let you know. I'll ask question afterwards, if you don't mind.
Yeah.
Because for a few things, I don't want to go face to face.
Yeah.
So mostly general question.
Yes.
You know, as a new member, I try to understand how the organizing working and
Of
functions.
course. You're welcome.
Thank you.
Okay.
So, which will be
I think the recommendation is the note to note.
page 44, number 10. So just to note the draft statement of account 2022 and 2023 as attached at Appendix A. So, it's just to note it.
Yeah.
So,
Yeah.
the book is-
Okay. That's me as well. I've not got many more. You're all right.
Yeah, so you
This is the Home Office Efficiency and Productivity Plan. So the service does have a requirement to produce an efficiency plan, and we have that. You've seen the Futures 25 efficiency plan that's been put before Fire Authority on a couple of occasions now. Back early in last year and in May, and also it was updated later in the year. But when and obviously we've also got efficiency built into the budget reports that you'll have seen come through in February. But when the government gave permission for fire authorities to increase council tax by the £5, they wanted to ensure, the Home Office were keen to ensure that we were exploring all other routes to improve our efficiency and productivity in light of getting the additional money, and we weren't just sort of sitting back taking the money and not driving efficiency through the organisation. So in February, towards the end of February, they requested that we submitted a specific efficiency and productivity plan. So it does, the deadline was by the end of March. It's quite a tight deadline for us to get it through without bringing it back through members, but we did consult with the chair of the authority before we submitted it. But this report is to bring you the document that was submitted, which is also was required to be put on the website, so it is available on a public document on the website. So the information included largely comes out of a mixture of the Community Risk Management Plan, the CRMP, which sets out our priorities for the year. So our productivity figures all come out of there. The figures for the budget details come out of the budget report in February. And also some areas went into a little bit more detail, and so those are just from our workings to build up to the budget report. For example, there's an efficiency table on page 183 which shows some of the savings that were put through, that were met before we even considered putting up the council tax. So you'll see they're quite significant amount of savings, over £1 million, that were considered before we looked at the option of increasing council tax. So, and then you'll see some performance indicators, for example, 185, those safe and well visits, that table at the top there, that table 5 on 185. Looking at some of the outcomes that are set out in the CRMP. It's quite a big section in section 3. It was very prescriptive what we had to put in, to be fair. We didn't, there was no, we didn't have a lot of leeway on what was required. So there's a couple of pages there on collaboration opportunities, which you'll see, but there's quite a lot that we do collaborating with both police, fire and other local councils as well. So some interesting information in there, and then looking at our transformation plans in the future in section 4 on page 188. So that largely comes out of the Future 25 strategy and the savings that we're looking at in there. So it also goes on to cover other areas, the investment in technology to try and improve our efficiency. I gave you an example of that with the iTrent work that we're looking at undertaking this year, and then resourcing and the other local initiatives. So I wasn't going to sort of read it any more than that. I'm assuming you've had a chance to have a look at it, but obviously myself and Leela, who's here, who pulled together some of the productivity information in her team, we're here to answer questions if you've got anything you want to ask.
Yeah, so two questions really. The first is on page 187, 3.11, regarding essentially the arrangement in place for Nottingham Council for Peppercorn Leeds portion of the utilities cost. I suppose Peppercorn Leeds, obviously the thing is value for money, isn't it? Is that something that we're keeping an eye on, making sure we're getting value for money for that one, or is it the other way around?
Is that one of the five?
3.1.
Sorry, Lee.
Sorry, it's related to the City Council occupying a section of London Road Fire Station, and it's related to when the building was built. There was, my understanding is there was a capital investment that was made by the City Council at that time, which is why the lease is Peppercorn lease, that those arrangements were in place when the building was constructed.
Yeah. Sorry, just to clarify, the land was part of the agreement. So the land that we built the fire station on was gifted for a 50-year lease for the top floor of the property.
Okay. And the second question is 4.3, about the transformational growth plan. I know it was a bit of a two-part essentially, regarding what actually was going to happen in those plans. I know I appreciate it probably was a very tight deadline, so you weren't able to actually outline any of the plans. So once the scope of programme was to be finalised, do we have a date on when we're expecting that to be returned? Kind of our cost implications, especially when it turns to Ashfield and etc.
So something will be coming to the CFA in July that outlines some of the plans, and that will be set in the context of the wider Future 25 programme, but we'll be addressing the Ashfield.
That's the main, yeah.
Yeah.
No worries then. Okay.
Just an observation really, again, as a newbie, I'm sure it was a bit of a pain for you and colleagues putting all this together at such short notice, but it's actually a very useful document. It gives us a lot of useful background as to what we're doing, what you're doing,
Yeah,
the rest of it.
Yeah,
So.
I agree. I think when we did it, we thought actually it was a worthwhile exercise.
A very short notice, and I'll take the hat off to you for getting it together. I think I probably know the answer to this, but out of interest, you've submitted it into the Home Office. Do they give any sort of feedback or response, or is it literally just for them to note? Or?
I think they use it to determine future policy and areas. They do a lot of work with the National Fire Chief Council and the Fire Finance Network, which is part of the National Fire Chiefs Council. They do a lot of work with the Fire Finance Network on efficiencies, and I'm sure they will be using this to work out good practice, and so hopefully some positive would come out of it, and we will identify areas that we might look at, efficiencies that others are doing well, and hopefully they'll use some of ours for other authorities to use to help them improve.
Share the good practice,
Yes.
as they say. Yeah.
Yes.
Any more questions?
Yeah.
Yeah.
Okay, on page 178. Can we note the recommendation on page 178, 10.1, 10.2, and 10.3? Noted. Agreed?
Agree.
Yes.
So we move on to item 9.
Right, this is my last one.
You've done well.
It is a lot at this meeting. Always quite normally the agendas aren't quite so long as this, but this has got all the year-end reports in. So this report is mainly here to cover the annual report from internal audit, and Andrew's here from the internal audit section to present it to you. We've also added there were 3 more audit papers that have not been presented. Normally I'll bring them in batches when we get a few, so we haven't got one huge report at the end of the year. So 4 came earlier in the year, I think it was in March, and then the rest of them, there's 3 further audit reports that are attached as well as the annual audit report. So internal audit are responsible for auditing our internal control, our risk management and our governance arrangements, and we use them, we generally meet with them, and they identify areas of risk that we might want to look at, and we look at those and we bring them through the strategic leadership team, and you'll see the audit plan from the proposed audit plan is included in the annual audit report, and this is your opportunity to feed into that as well if there's any areas that you feel that you would like looking at that will then be reflected. So County Council provide our internal audit function, so it's different to the external audit who do the statement of accounts, and with that I think I'll hand over to you, Andrew.
Yeah,
That's
okay. Yeah, so this is our annual audit report for the year just ended 2022-23. I'll just go through the main points on this. If you go to paragraph 10, our overall audit opinion for the year is substantial assurance, which is our highest grading. The rationale for that is in paragraph 10. Our audit report opinions have been, some have been reasonable, some have been substantial assurance, but the core systems are mostly substantial. In particular this year, we looked at budget management, gave substantial assurance, risk management, again, substantial assurance, and last year we looked at payroll, gave it substantial assurance. So on balance, we were tending towards a substantial opinion. The second bullet point there, an action tracking, which we look at the implementation of recommendations from previous years, and we're finding that's positive. I'll come back onto that later because there's more on that in this report. And the third bullet point in paragraph 10, the rationale for our opinion is that our opinion on the framework for governance, risk management and control is positive, and I'll come into more detail on that later in this report. If you go to paragraph 14, that summarises the individual assurance audits that we've published this year. 2 had substantial opinions, that's budget management and risk management, and 4 had reasonable opinions, that's performance management, vehicle maintenance, asset disposal and the joint HQ cost apportionment one, which at the time of drafting this report it said to be finalised, but that came in as reasonable as well. Paragraph 15 just gives a summary of the recommendations from the reports we've issued in the year. Now we'll go on to the action tracking, so from paragraph 16 onwards. And this is where we track the implementation of recommendations from previous years. Paragraph 18 reports 84% of recommendations from the previous 4 years have been implemented. This is supported by Appendix A. If you want to just quickly go 4 pages ahead, there's Appendix A, which has about 8 pie charts in it. And that illustrates the...
Page 210.
Yeah, my version's not got the page numbers.
Sorry.
I printed it off into
sorry.
the website.
Apologise.
Yeah, so in the previous 4 years, we've made 64 recommendations and 54 of those have now been completed, which is where your 84% implementation rate comes from. 10 are outstanding and are still being tracked. And we do an annual action tracking exercise for that. Paragraph 22, we're going to go back to that. And this gives our opinion on the framework for governance, risk management and control. And this is supported by detailed assurance maps in Appendix B, which I won't go to at the moment, but they are there backing up our opinion here. So in paragraph 22, our opinion on the framework for governance, we give it substantial assurance. The headline reasons for that are the 3 bullet points in paragraph 22. I may as well read those. Governance arrangements are well structured with comprehensive reporting. Plans are in place to achieve strategic goals and identify and realise improvements. There are regular reviews of performance. Paragraph 23, our opinion on the risk management framework, again a substantial assurance. Risks are closely managed through a corporate risk register that's actively maintained. This community risk management plan is in place and emerging and national local risk issues are identified and addressed. Paragraph 24, our opinion on the control framework is again substantial assurance. There's close control over finances, current and future spending and financial assets. Workforce requirements are identified and acted upon. Workforce performance is managed. Paragraph 25 is a section about internal audit ourselves. So there's a table of key performance indicators which show that our internal audit performance has been generally satisfactory in the year. Then going below that table, we mentioned in March this year we had our 5-yearly external quality assessment. Internal audit have to be assessed every 5 years. It's a requirement of the public sector internal audit standards. There was a positive outcome from that, as outlined in paragraphs 29, 30 and 32. So finally, I go on to paragraph 33, which is our audit plan for this year, and this is supported by Appendix C. So if you go forward to Appendix C,
Page 280.
yes, so this is our audit plan for this coming year. This is based on an assessment of all potential topics, which we call the audit universe. This is risk assessed, and then we consult with the head of finance, and then the head of finance consults with SLT. And from that, we plan to cover this year the following 6 subjects: workforce planning and recruitment, contract management, health and safety, business continuity planning, information security, with a focus on physical access security, and 6thly, leading the service and the National Fire Standard on leading the service, which focuses on leadership. This is 6 audits. It's a reduction from 7 last year, which reflects our staff resources in internal audit. Our section is reduced from 8 staff to 5 staff in the past year, and we are now trying to recruit, and somebody's just been recruited this week. So we are trying to build it back. But the reduction from 7 to 6 audits won't impact on our ability to form an opinion as we cover the key systems and we do those 3 assurance maps and governance, risk management and control. Okay, so I'll finish. That's the plan. If anyone's got any questions, sorry, the annual report.
If I can just say, there is the cyber security report forms part of your exempt items. So you might want to consider that as well. But obviously we can't pick up any questions on that until the exempt part of the meeting.
Yes. On that, yeah, to be honest, the audit, internal audit, to be honest, very well done, to be honest, that what is called page 218. My question was like how closely you maintain the risk management, the control management in terms of when you do audit control. Yeah. If it is something, finding the issue or any concern, how closely work and how closely discuss about that.
How do we...
Like any issue you find, like something like financial, anything that you think is not right or might not happening in the right direction?
Yeah, so for each of our audits we issue an audit report, which well, a couple of them are included in here, and our findings will be in that with recommendations, and we'll hopefully agree those what to be done as a result of those recommendations, and that creates the actions which go into those action tracking, which you see those pie charts, and we track that those actions are implemented.
That's great, because you see, finding the right time, the issues and things is really saving the organization whose direction are going to. Because sometimes many organizations, if they don't find the problem in the right time, then wrong decision can happen and things like. So it's really good the way the chart is, it shows in there the like kind of high, medium, and substantial concern that you actually noted down.
Yeah, and the reports go directly. They don't just come to me. They go directly to Councillor John Clark as the chair of this committee, and also Councillor Michael Payne as well. So and the chief fire officer. So they go. They're not just circulated internally. So just to give you some assurance that they do. If there was something that came out, it would be known by councillors immediately at the same time as I would be made aware. So there is some confidence that you can take from that if there were any particularly large issues. And also, Andrew comes to the strategic leadership team several times throughout the year to discuss the audit outcomes and also planning for future years as well.
That's good, yeah.
It's something that always interests me, not just here, but any organisation that has internal audits, is, and you've answered it anyway, but who audits the internal audit? Because it would be so easy, wouldn't it, to say, oh yes, we've done this, done that, and the other, but it's good. Well, it's plainly obvious that the organisation is in place to check how our audit's doing. It all looks pretty good, doesn't it? But also, it's always quite encouraging as well, where it's plainly they've not just ticked boxes. They have highlighted just a couple of advisories, haven't they? So, which is always a good sign, because if you get a perfect audit, then that cannot.
Yeah, and we do purposefully, if I find an area, we'll move the audit plan around during the year, which is why you've not been asked to approve the audit plan, because if I think there's something going on and I'm not entirely happy about it, I will request that the internal auditors maybe swap some audits around and have a look at specific issues, or if we've had areas that other fire authorities have had issues with, we'll ask them to look at those. So, and we have last year, we had 2 areas that got a lower grading. What's the lower grading? I can't remember. Limited assurance, and that was because of that, because we'd specifically asked, because we got some concerns in those areas, and then we get the benefit of having someone come in and have a look and coming up with recommendations for us to improve. In fact, 2 of the audits were those that were undertaken this year were those 2 audits from last year that didn't go so well. So it's not that, you know, I could, I suppose, pick areas that I know we're going to do well in, but the whole point, we're paying for a service to provide us with some assurance.
Yeah,
and
absolutely.
as my role as treasurer, that you know, I want that assurance every bit as much as you yourselves do. So
That's good.
Yeah, we have to do a mixture, don't we? So we have to cover the core systems, but we also cover some others where we think might be problems.
yeah.
And could I just ask, and again, it's ignorance, possibly on my check, but on the Appendix C, what's a Cardiff checks? Or is that a silly question? Or have I opened something up?
It's a historical audit that was undertaken by, it goes back a long way.
Yeah, nobody really knows, but
Oh, right.
Well, it's not just me then. That's
I was discussing it this week. I really would love to know why they're called Cardiff checks. And you can Google it, and we were finding councils in Cheshire and Portsmouth do these, and I don't know if anyone knows why, but they are detailed. You take 3 invoices and you look in great detail on them, don't you?
And follow them through the system. So we used to get the chair of this committee, in turn, we'd get a printout of every invoice that was approved and paid, and then out of that selection, then we'd allow the chair of the committee to pick a certain number. I don't know how many it was, I can't remember, 10, say. And then we'd follow those 10 invoices from cradle to grave.
See, right.
And then, so you would see, you know, at every stage of every step of the way, that they were properly approved, that they were being properly input, that there was proper segregation of duty, that the amounts had been checked, that the bank accounts hadn't been changed or anything like that. So all the areas that you might be open to fraud or problems would be checked on those invoices. But now we tend to look at the core systems instead, so we haven't done the Cardiff checks for a few years. It sort of fell out of favour a little bit, didn't it?
Yeah.
Great.
Okay.
It is what it is.
Yes.
Can I ask you something?
Yes.
You know, you was talking about the underspending, the big, one big thing that actually affected on the budget as an underspend on staffing recruitment. How often is happen, and what is actually planned for that?
But
For the recruitment, because it's quite big.
But the underspend, we have probably a history of underspending. We've not overspent since I've been here, so we do, but not always by very much. We might have had a couple of 100,000 overspent, but we're generally not very far away. And some of the figures might seem quite large, but if you look at them as a percentage of the budget, like £1 million is a significant amount of money, but it's only 2% of our budget, so it might seem a lot. And I would say we've always been within that sort of threshold. So it's not a significant variance. We tend to manage it in year, and that's the purpose of bringing these reports and doing an internal review. And we might, if we look like we know, if obviously if we're overspending, we'll look at making savings to compensate for that, to bring us back in line by the end of the year. And if we're underspending, it might be that we might reallocate some of that funding to deliver some key priorities. For example, on the CRMP, we might look at reallocating that in a timely manner at the beginning of the year if we can do so. And there are always some surprises that come throughout the year, you know, like fluctuations in inflation have caught us out before now, and the pay award last year allows us to sort of contain those additional costs that come out of the blue. Does that answer your question?
Yeah, no, that's great. Thank you.
Any more questions?
No more questions. Can I ask one more question?
Okay,
Yeah. So what are some effective strategies or tools used to monitor the revenue streams and identify the potential areas of improvements?
Just the revenue streams, or Well,
the revenue streams?
yeah, our revenue streams are fairly predictable because we've got obviously the revenue support grant, business rates and council tax are both set at the end of the year. So when we get the funding settlement, we get the provisional one in December and then the actual one usually towards the end of January. So those don't change, and they are, if you look at the reports at the beginning, find the right table here. So if you look on page 28, you'll see the revenue support grant, the business rates, your pension grant and your council tax and that general fund and the earmark reserves. They are all known, they're fixed at the beginning of the year. What will change is when we get government grants in the year, so sometimes they'll hold pots at central government and they'll get allocated during the year. So and those feed into your income and expenditure. So you'll see on other income on page 37, your other income is about 4 to 5. It's between 4 and 5 million on there, and that's the bit that might vary. They're the one-off grants that we get from government and income that we get, but we don't generally generate a lot of income from the nature of the work that we do. But those are other grants, and they vary. But as a proportion of the whole budget, you'll see they're not that significant.
Absolutely. That's right. Thank you.
Thanks.
It's true.
Yeah.
So can we, on page 202, can we know the recommendation 10.1, 10.2, and 10.4? Agreed.
Yeah.
Item 10, exclusion of the public. To consider excluding the public from the meeting during consideration of the remaining items in accordance with section 100A of the Local Government Act 1972 under the Schedule 12A Part 1 on the basis that, having regards to all the circumstances, the public interest in the maintaining an exemption outweighs the public interest in disclosing the information. So can we exempt?
Agree, yeah.
Yeah, so recommended.